Video is private. What is this? Okay. Why is it not showing the video? Can you guys see me right now? One sec. Let me see if I could click on the link and what shows. Video is private. How is that? Video is private. What is this? Okay. Why is it not showing the video? Okay. Can you guys see me right now? Clearing my throat. And no, as I was going through I don't know what the hell I just, maybe it was my breakfast. It's saying on my, so good morning everybody. How's everybody doing? Good morning, good evening, wherever you're coming from. It is 9:07 a.m. New York time on today's Friday. Okay. Oh, it's because, oh, excuse me. Hold on one sec. Let me switch between back through the other account and we'll fix this in 1 second. Blockroots. Let's go live. Manage. This is a pain in the butt. Okay, there we go. Not sure why that happened. So I'm on the other screen. It says that as we're in the stream, it's telling me that that video is private. But for some reason, I was logged into my other YouTube account. So how's it going, everybody? This is Crypto and Coffee. Good morning, good evening, good night, wherever you're coming in from, because I know that we have fans all over, and we appreciate everybody, whatever part of the globe you're on, wherever you have an internet connection. Sweet Canary, what's going on? Cornholio, Jimmy Trendricks, you know I love that name. Crypto Cord, Bradley, Tom Glass, yeah, pow pow. J.E., what's going on? Gassan, D. Ross, the reigning champion in giveaway wins. Michael Williams, Matt Hood. Okay, all right. Thanks, man. Glad you liked it, Mute. Glad you liked it. So I did a podcast with Karush, and I've known Karush for a really long time now. In as far as crypto Twitter goes, we've been interacting for a while. And the funny thing is, when I was doing the podcast, I didn't know, because sometimes he'll post I've seen it, I think, where he posted a podcast where he's interviewing someone on YouTube, and there's the video, and then I think now it's moving just more towards posting the audio. So when we're in the video, I'm sitting back in the video and I'm like lounging and I have my hand on my knee. And every time I talk, I do this. You probably can't see it in this right now, but I pick my hand up and I smack my knee, and I had a pen in my hand, and I talk with my hands all the time. So in the audio, you hear that, but there's really no context. You don't know what's going on. You don't know where that sound is coming from. So a little bit distracting, I would say, as after I listen to it after the fact. Okay, guys, so this is Crypto and Coffee. On behalf of my partner Josh Rager and I just want to thank you guys for tuning into the Blockroots YouTube. We're going to go over some of the more recent developments in the space. I picked 2 tweets today that I thought were noteworthy, one for being a poor take and one for being a really great take. Really just the one that was a great take is not necessarily some kind of newsworthy great take, but it's a point that I think is worth going over, and I think that it gets towards it's in line with sort of our I guess whole purpose, which is to provide some form of education during these streams. So not just to highlight the news. Took me a second to get that one out there. I couldn't decide if I wanted to pause and clear my throat again, but to highlight something that I think is important with regard to ranges. And then we'll take a look at charts and take chart requests, and hopefully that'll be it. Okay, so I see someone said, hello, Phemex competition starts in 11 hours. Can we see Blockroots trades in there? So here's the Phemex competition. This is our page right here. We are the Blockroots team. There are 43 members right now. The competition starts tomorrow. As far as seeing the trades, I don't think that it shows you, just like all the other competitions, I don't think it shows you the individual trades. It's not going to show you the individual trades. What it does show you is, percentage gains in terms of ROI. So, if your account is up or down, it's just going to show that. It's not going to show, your individual trades. JE, let's discuss the Phemex trading comp on the stream. Give everyone a game plan. So for anyone who is joining the Blockroots team, all you have to do is tell me that you're on the team, and we provide a link, and you join the community page. And what that means is we're not putting together a, okay, this is what you're going to do, this is what you're going to do kind of thing. We're just going to communicate during the competition to ideally put ourselves in the best position, but there's really no game plan to talk about right now. It all depends on where the market is over the course of the next 2 weeks. Are we going to fall back into some form of consolidation or into more of a ranging, mean reverting environment? Or are we going to continue in sort of this impulsive fashion? Ideally, volatility stays elevated, so that would make for good trading conditions. But yeah, there's really no game plan to discuss on the stream. I'm going to be focusing on mostly intraday, mostly scalp, and like I said, I think I said this 2 weeks ago or a week ago. I said this on the Phemex stream also. Part of me is going to be a little bit degenerate in that I'm going to be looking for some higher leverage edge plays. So by edge play, I just mean playing for the scam wicks to the upside and to the downside at the exteriors of any kind of structure that we're forming. Just one of those long shots, right? Looking for something that is ideally works very quickly, or I know very soon whether I'm on the wrong side of a trade as well. So playing towards the edges of a range, something like that, is something that I'm going to be consistently doing. And then just applying the same sort of approach that I approach on the day-to-day. But the goal is to obviously grow as much as possible, because this is not something that you're going to see that. So these teams, for example, right here, the teams with 621 members, 512, those teams are probably going to put in ridiculous numbers. And maybe that team, not even specifically, but what you normally see, just because I would think that, what you normally see, what I've seen in the past is that, it's a little early, I'm a little tired still, I got to get this coffee down, is that the teams with the largest amount of players, they tend to do really well, right? Because they just kind of throw the entire book of approaches at the market, and your top 10, your top 20 people, at that point it's just a game of numbers, right? It's a game of numbers, and we only have 43 people. We're good enough to be in the top 6, but there are people that they can have quite a lot of failure in their group and just have a few successes and do tremendously well. Okay, so cool. All right, guys. Before we start the stream and get it going, if I could just have you guys hit that like button. This way we are prioritized in terms of YouTube analytics and YouTube's algo. We want to continue to put out this good content. See, that's why my brain is a little stale right now, because I haven't even really drank much of my coffee yet. My niece was over this morning, and as I told you guys in the last streams, I am completely shot right now for some reason. I got to bed early too, so it doesn't make any sense. But niece was over early this morning, and the first thing that she did when she came over was decide that she wanted to make banana bread. So her and my wife made banana bread, I guess around 7 o'clock in the morning, because I was up, and my niece is a ball of energy. So I never really got a chance to suck down my coffee. Okay. So the Phemex competition starts tomorrow. For those of you that are not signed up yet, if you want to join our team, I think there is just 24 hours left to join, so feel free to do that. And moving along. Okay, some things that I think are worth touching on, considering the market has been sort of hostage to the stimulus talks. It doesn't seem like we're going to get a stimulus until post-election. There's a lot of back and forth between Democrats and Republicans, between both sides. And we've seen that over the last few weeks, the stimulus talks have been sort of the catalyst for short-term movements in the market. I think that participants are becoming a little bit more privy to what's going on right now, and how this is sort of a bargaining chip, or a lever rather, and being used by both sides, right? And I think that markets are beginning to cool down, if anything, to the fact that the prospects of the stimulus passing before the election are dwindling. Now, that being said, I think that's a good thing, because we've seen a lot of volatility lately due to this, and we've also seen that volatility in traditional markets has translated to volatility in the crypto markets. This is something that is maybe not as apparent as of late, so that's a really good thing, that correlations in the short term seem to have broken down to a degree. That being said, it's good for the short term for traditional markets. I think that people are just kind of aware right now that it's a game being played. And after the election, my belief is that there's a 90% chance that the stimulus is passed. I was reading. There's a 90% chance that the stimulus is passed, and what form that comes in remains to be seen. But that being said, markets are becoming, I think, they're aware to what's going on right now, and we're not seeing the same level of volatility. Other thing to talk about, yesterday I saw an article talking about DeFi, and I've gone over DeFi in my opinion on where we sit in DeFi cycle. I think that DeFi has already gone through pretty much an entire cycle and is now in the phase of ideally bottoming out, and this means for many of them that they're not yet bottomed out. I think that it's a little too soon to get into a lot of the more speculative DeFi pairs. One of the things that's referenced in DeFi or in the DeFi market, and it's in the crypto market still, is sorry, I don't know why I'm so congested, is the ETH that's locked up, or rather the total value lockup, right? So the total amount of liquidity, total amount of collateral that's locked up. Now, I mentioned how it's important to distinguish between, USD value and ETH value. So if you're looking at the USD value and you see that total value lockup is increasing, and I believe Cointelegraph put out an article on this yesterday, and Cointelegraph, in my opinion, is not the best source for for I guess non-sensational or unbiased crypto news and updates. It's a little, I don't know, it's not one of my favorites, put it that way. They put out some ridiculous things. I think that they have cool artwork and cool graphic design for their articles, but aside from that, I was in a Cointelegraph article a while back. Not really a fan. But what they said was that, total value lockup is increasing. The DeFi is beginning to move again, sort of implying that it's going to, move with Bitcoin, and the whole market's going to raise up with Bitcoin and with ETH as they outperform. And it's misleading because it's talking about total value lockup in USD. And what that is omitting is the fact that most of the total value that's locked up, most of the capital that's locked up, a lot of it is ETH. Okay, so when ETH goes up in value, it's going to increase the USD value of TVL. So what you have to look at, and you can see there's actually a slight difference between the TVL chart on USD terms, and then we go to ETH, and we've had a little bit of a turn more recently. And this was right around the area, this is right at the area where they're talking about total value lockup increasing. But it's actually not. It's just a lot of it is the fact that ETH has gone up in price. So a little misleading. And again, I don't think that you want to jump full force back into to DeFi pairs. What I think is the better idea to do is to pay attention to the market leaders in DeFi. So when it comes to market leaders in DeFi, I would say that Wi-Fi is probably your best bet. Personal opinion, you're in finance. I think it is more or less the index of DeFi, or I've called it before the Bitcoin of DeFi, even though that sounds a little funny. But I think that it is a good leading indicator for the health of the DeFi market. And right now, we'll get to the chart momentarily, but right now, Wi-Fi it's still below some pretty significant levels in market structure, and it still has work to do. So it could be bottoming out, absolutely, but this doesn't mean that everything moves along with it. As we've seen in just regular crypto assets before all of this DeFi hype cycle, there's been plenty of things that were great ideas and had awesome white papers, and they were completely left behind, right? And then they sort of had these ghost pumps well into the future when they became irrelevant. Next thing to talk about, okay, the CME's rise in Bitcoin futures rankings. Go figure, right? What they're doing is essentially hunting out any kind of competition. So the United States government and regulators are hunting out competition. And BitMEX was, again, like I said, prime target number one. And of course, it makes sense that they're doing that because they want it to be played on their field. But again, they also want to have a dominant seat at the table. All right, this is a business. Make no mistake, this is a business. So what we've seen over the past week, again, go figure, is that the CME has risen in volumes and in open interest. So if we look at skew, we can see that now the CME is second to OKX, okay, in futures open interest. So here we have the CME right here, And then in terms of 24-hour futures volumes, you can see that the CME has now moved up. Where did it go? This thing is, oh, it's actually, okay, so this is moving constantly. CME is down there, but it's right below FTX and Deribit. More importantly, I think the open interest factor, though, so that we actually have an indication that these contracts are being held, right? And this is more for, OKX doesn't just have perpetual swaps, all right? They have normal futures products as well, linear futures products. So CME, again, is getting a more dominant seat at the table. Now, one thing that I think is always important to point out when it comes to the CME futures product is that even in the past, when CME was seen as sort of irrelevant, I always reminded everyone that it's not irrelevant because the CME requires a larger amount of margin to keep a position or to initiate a position. So on BitMEX, you have a high notional value, okay, meaning that the total amount of contracts is high, but the amount of capital that's actually used as collateral as margin might be, drastically different than what we see on the CME compared to the amount of contracts that are open. Because if you think, for example, if you have a 100,000 contract position, 100,000 contracts, you could technically open that on BitMEX with $1,000, right? So $1,000 in BTC, 100 times leverage, and you're controlling a 100,000 contract notional position with only 1%, right? Now, on the CME, the volumes might be less, but on the CME, it requires that you have 33%, right? 33% margin to control that position. So if you want to control a position that's worth 100,000 contracts, you have to put down, for example, just to oversimplify this, $33,000 to control the position. It might even be slightly higher than that. But, I think that there's a sort of misunderstanding when it comes to the CME and it being relevant to begin with, just because there is real capital that's behind these positions. The notional value might be slightly different, but at times, I think this is the point they're trying to get to, at times the actual amount of real capital at stake might be closer than we actually think, right? So the amount of real capital that is being used to open the positions just because the CME requires or has those, margin requirements. So that I think that is important to point out. I think that we're going to see that the CME's dominance just rises over time either way. And I think that kind of covers it for some of the news topics that I wanted to hit, just some of the things this morning that I saw. Yesterday I shared Tudor Jones, him talking about how, again, Bitcoin is the number one horse to be in the race right now, or the number one horse to pick in the race right now, the fastest horse to pick in the race. And he's standing by his word. And you see that yesterday he actually said that he has a single digit position, right? Now, that doesn't mean that he owns less than 10 Bitcoin, right? That he owns 7 Bitcoin, 8 Bitcoin. That's the percentage of his allocation, right? So if he has a portfolio of a basket of assets, traditional assets, legacy assets, and then he has one, maybe 1, 2, 3, 4, who knows, but less than 10% allocated to Bitcoin. I have a feeling that the guy probably increased his allocation over time, right? Has been adding to this, very confident, and this is not just him blowing smoke, right? This is, again, something that we've seen. There's been a correlation between Bitcoin and the dollar going back a few months now. So there are a lot of people that are in the space right now that are maybe not as confident. Okay, they've been bitten before by Bitcoin, and you have a lot of other people that are coming into the space that are major macro players, and I think that it's really good to go with the smart money. In this case, I think that it's a leading indicator, and I think over time what we're going to see is that there's going to be more and more of this rollout with regard to other major players in the traditional finance space having allocated to Bitcoin in some form or another, whether it's on balance sheet or off balance sheet. Okay, so now that I've just gone through that, let's see. Watch a podcast with Morning All. Did notice really good stuff. Okay, you guys working as a team. Okay, went over that. How much BTC do I need to deposit be on the team? I think it's 0.02. Okay. Okay, huge margin. Yes, so we just gone over all that. I didn't really have that set out and planned to talk about until this morning. I just pulled it up when I was on CoinDesk. So I apologize for also not having the full amount of coffee I normally have. I am like, sometimes you wake up and you have a bunch of energy, and other times you wake up and your brain just feels like an Atari. And that's what my brain is right now. It's Atari. It's not PlayStation 5. So, looking at I want to go over two tweets, and then and this will again tie into sort of our purpose at Blockroots, which is to educate. So the first really poor take, I think, and I've talked to this guy, and I feel bad. I don't want to share it as a poor take and say that he's an idiot or anything. But this is by Michael Gogol, and this is Bitcoin at 13,000 looks more like an exit pump to me. But hey, does it really matter? I could give you so many reasons that would explain this move, and the PayPal narrative isn't one of them. Well, I can't really figure out a move that would make this an exit pump. Okay, so to define what an exit pump is, let's say you have a lot of whales, and this will be something that you more often than not see in an illiquid, so I guess neglected asset such as alts, where you'll have a bunch of people create a pump or a mini hype cycle to gather a lot of interest by retail participants. After that pump is over, what that pump was essentially engineered to do is to provide exit liquidity for larger players, right? We see this in alts a lot, right? With things that might be speculated to be exit pumps, where they'll have a 100, 200% move out of nowhere, and you get a lot of people chasing it up towards the high, and then what happens with that pump? It completely retraces because there's actually no book strength behind it. It's just a very thin pump, gets to a certain level, you get a bunch of aggressiveness towards the high by retail that thinks that it's the beginning of something major, and you see a lot of volume that's transacted in that pump, and ultimately it's a way for founders and early investors to find some exit liquidity, and again at a better price. The idea that this is something that is taking place with Bitcoin, I think is just it's a poor take. So we'll just put it kindly and call it a poor take. The amount of coordination and collusion that you would require to engineer something like that with Bitcoin, it's unrealistic. And what I didn't realize, and this is going to tie to another point, was that I saw this tweet when it came through on Twitter, and I just went past it, and I was thinking, I looked at this guy's page, and apparently he's a crypto analyst, a writer, what have you. Not taking anything away from him, seems like a nice guy, but during times like right now, if you're on Twitter, you're going to be exposed to everything, right? There's going to be really no filter. You're going to be exposed to everything. You're going to have a lot of people that are going to be writing things that might be provoking an emotional response in you, right? And where things are right now, that could mean that people read a tweet like this and they immediately sell their entire stack, and they make sort of a knee-jerk decision because Michael Gogol said that this is an exit pump. If you look further into it, he's been bearish on Bitcoin for the last 7 years, and been publicly, he's publicly stated his bearish position. And at that point, you lose a little credibility, because in the last 7 years, I think that Bitcoin is probably number one or top 10 performing asset, right, in the last 7 years. So it's really difficult at that point, when you see that someone is consistently bearish on an asset, to give any credibility to an idea they have, let alone an idea that would require a tremendous amount of sophistication on part of the participants to organize something like that. So exit pump, I don't think so, man. Just be careful during a time like this, because while you do have to be intelligent about your positioning and where you're going to be entering and where you're going to be defining positions and why that never goes out the window. Just be careful, because let's say that we're on our way up towards previous all-time high, which is never a given, right? But we're confident we're on our way there. You're going to get a lot of people that are going to say things that are the worst possible things you can imagine about Bitcoin during a time like that, right? So hopefully you have the wherewithal to sort of stick to your book and stick to your approach, and not allow this noise to come into your approach and to affect it. That being said, you also have to guard against the overly euphoric people, the people that are posting things that are just ridiculously optimistic with no regard to reality. But this I just thought was a really poor take, because an exit pump in Bitcoin would be very hard, again, to engineer. Now, the next point that I want to get into, and then we'll look at some charts. This is by Light Crypto. I don't know why I say point, it's a tweet. So Light Crypto, I've been following him for a really long time. He is, in my opinion, one of the best follows on crypto Twitter. I'd say he's a lot quieter than everybody else. Low profile. Clearly a very experienced trader. If you're not following Light Crypto, you absolutely should be following him. he posts a lot of things with regards to futures and options, but you could tell that he also is a market generalist. He has a really experienced, or he has a really thorough and informed view on everything from a macro perspective. And this tweet was, market participants are continuously conditioned to fade in low realized vol, mean reverting environments until they do it blindly. Then the market regime changes to trending and all late mimics get rugged. And I think this is a good segue to go into the concept of a range. So when he says late mimics, okay, those are the people that act after something is patently obvious. All right, so we'll just go to Bitcoin and a more recent range. Okay, we'll go back, we'll go down here, for example. All right, so over here we have a range that micro range within a higher time frame structure, but you can see that this is price that is confined to a general area. In this case, it happens to be between 11,420 and around 11,260. And I just pulled this one out of thin air. It's there's ranges all over this chart, but this is just to convey an idea. So late mimics are the people that hop on after it is obvious. Okay, now identifying a range is a skill. Every range is obvious in hindsight, so it's really easy to tell someone, hey, listen guys, when you have a range like this and you have this high and you have this low, and we're just pulling this one out of nowhere because people might define this range by this, they might define it by that high, but it's really easy to go back after the fact for your approach and say, hey, if you have a range, all you do, buddy, is you buy the low and you sell the high. It's that easy. Look at the amount of times that worked. Off of this high alone, or going back to this low, you had 1, you had 2, you had 3, you had 4, you had 5. These are 5 awesome trades, man. You could have banked, right? You could have had each one of these was over a $200 rotation. That's a half a day's ATR in a move that's in 30 minutes. So that is obvious in hindsight. Okay, the skill in a range is being able to identify it as it is developing in the beginning. All right. Once something becomes obvious, what are you also implying about the range? If a range is obvious, so for example, here's our range. Okay, let's just say, for example, first this one. Is this range obvious? No, it's not, because if you're looking at this right now, you are maybe anticipating a range starting to form, and you might in that start to play it like it is going to form, right? You might set yourself up, but that's not obvious. This range is obvious, right? But what does it mean to be obvious? It means that a lot of it has already taken place. A lot of it has already been painted. And now what does that also mean? That means that if there are very defined highs and lows, that there's multiple test set levels already. Okay, so with every subsequent test, whether we're coming back down or back up, it makes it such that the probability of a break at that point becomes much more favorable, right? Or the idea of a break at that point becomes much more favorable, rather than this to continue mean reverting and have a range that's tapped within a small amount of time, 8, 9, 10 times. So if you're looking at something like that and you're thinking that it's just going to persist, because again, he says that there's a low realized volatility environment. So you could look at something like historical vol, you could look at realized vol. And the idea is that price has been stuck in a range, and you're thinking that it's just going to continue to do that. But that's not where the skill comes in with trading a range, or how range traders really thrive and how they manage to be successful. It's not in seeing a range that has already occurred, and has been occurring for the last few days. That is where I'd say the naive traders come in, where they'll say, oh, we're in a range, I'm just going to continue to trade it like a range. It's the same concept of if volatility is low, people consider, all right, volatility is low, and I don't want to say just people and talk broadly about people that might not exist, but when people assume that volatility is going to remain low and they sell options, right? When volatility is very low and we're in a mean reverting environment, selling options is sort of the same as just taking that blind trade at the exterior of a range that has already been formed for a really long time. Okay, so for every test that comes back towards the high or towards the low, it just becomes that test that is likely to break at that point. It's not that it becomes, but the probability of it breaking at that point is greater, right? If we assume one direction over the other, after the fourth, the fifth, the sixth touch, which is something that, that's just kind of pulled out of thin air. But after multiple touches, I am favoring one side breaking, right? If this is our range and we've just moved off of a low and we have, let's say we have 2 touches at the low and we're moving back up towards the center at this point, and we have a defined midpoint, we have defined highs. Once we're on our way back towards this high, I'm probably not going to be taking this mean reversion play with maybe the same amount of confidence as the first touch. Okay, so the idea of trading a range, it seems really easy, I think, in hindsight, because you always have the benefit of looking back and saying, oh, that was a ranging environment, it was so easy to trade, look how many opportunities it offered. And you're forgetting that the skill in trading ranges is first to be able to identify them as they're in progress right in the beginning, right? So how do we identify that a range is maybe setting up? And I think that this is, we'll get into this and we'll talk about this briefly. This is something that we teach in Blockroots. So highlight Blockroots for a second. This is something that you can do without Blockroots also, right? You can go onto Exo charts. You can go on to, let's say, there's a few other platforms. This is Sierra, there's Exo. I'm thinking about what other platforms have TPO. Go charting, I think one is called. So correct me if that's if that's not the right one, but there's a bunch of other TPO platforms. Okay, so in a trending environment, so one of the things that we constantly talk about is, and we'll use this example because it's taking place right now. In a trending environment, what do you normally have? You normally have price impulsively moving with conviction in one direction, right? In a mean reverting environment, you have price that's stuck in more of a balanced state. So mean reverting environments, balanced states, they tend to look something like this. So like this TPO, see how it's sort of a balanced distribution? You could even say that this one is a semi-balanced distribution compared to something like this, compared to something like this, and definitely compared to something like this. So the idea of balance, any kind of distribution, look at the distribution that I'm drawing right there, and then what does that look like? It looks like your standard sort of Gaussian distribution if we drew it like that. So it's balanced, right? It has symmetry. It has some level of symmetry. That's what a range looks like. That is normally how a range begins to form. Okay, a range begins to form obviously after an impulsive candle, so it's always going to be preceded by an impulsive candle. But a trending period, so the thing that leads up to that, normally not only has imbalanced structure like this, okay, with a bunch of conviction in one direction, but it also has value that is migrating. So, and I keep moving my hand outside the screen. I realize you probably can't see it this low. Who does this? Who does thinking about the debate last night? I love Trump's hand signals. I can't even remember exactly what he does. He does the finger thing. It just freaks me out. Oh, it's this. I don't know what that is. So in a trending environment, what you normally have is value migration. So the value area is where we spend 70% of the time. So 70% of the time for a TPO value area. If it's a volume value area, it's where 70% of the volume is transacted. Now you could go on Exo, you could pull up this chart as well. This is not, something that is, locked behind a paywall. I think you could find a free TPO chart. So value migration is when value has been moving up or down over time, right? It's not confined to it's not confined to any area. It's consistently moving in one direction. So this is value migration. This is a pretty strong one. You have the entire value area that is outside of the prior day's value area. That is clearly a trend that is beginning and is, coming off of a very strong move. Now, and that could be the trend that's ending. So that could be a blow off top, right? Doesn't mean that value being completely outside of previous value is to be taken as one extreme or the other. But the end of a trend is when you have value begin to overlap. So this is the value area of this trend day, which is less important than the value area of a balanced day. But when you have value overlap is when we start having most of the value area of the first day that follows, right? When we start to have a day that follows a trending period where the value area has been, there's value overlap, right? Where the value is kind of lining up. Now, what this is saying is that in this case of volume and of time, right? So from TPO and the volume value area, is that buyers haven't been able to at this point to raise value, right? To carry value further up. And again, it's important to look at price at not just one point in time or just one specific price point, but look at it as a whole, right, as a distribution. So what we normally see that sets up for a range, and this also will give you a good idea of, more often than not, this is going to set up your first day's high and first day's low, is that you'll have a case where instead of having consistent value migration over time, you'll begin to have value overlap. Okay, so this is the first day into the range, and you can see already we're beginning to paint more of a ranging structure because we have, again, most of our structure right now, and it is the morning, so it's a little bit too early to tell, but we're forming within the prior day's value. Okay, and this is so far a more balanced distribution. All right, so this is how you'll normally see that all, so if we just go back to other ranging periods, okay, so specifically this is a good example right here. You had, let's back up. So here is a trending period, a bunch of imbalances, right? These are liquidation structures, just single prints on the way up, short squeezes. Okay, so we have 3 back-to-back. And then what do we have that indicates that we're maybe falling into a more balanced state and we're going to be consolidating? We have the first day that becomes very balanced after, and again, basically an inside day and an inside value structure to the last trend day. So this is when we start to look for maybe that mean reverting and more ranging conditions that you wouldn't otherwise, you wouldn't necessarily know that value has been, or buyers haven't been able to consistently raise value if you weren't looking at something like the TPO chart. And what this also does at this point is if you're looking at your structural chart, so if we're looking at this chart that we most recently referenced, or the first one that we referenced, excuse me, with that value overlap, this is your low and this is your high right now. So these are the areas that I'd be looking to if I would anticipate that a range is forming. You have to obviously take this in context though, because is this going to be now we have to imagine this, after coming off of a very impulsive move and after breaking market structure in such a significant way, is this range and consolidation that can offer mean reversion opportunities, is it likely to offer consistent resistance at the bottom or at the high? So, excuse me, I should rephrase that. What is more likely to break in this range? All right, what are we putting our money behind occurring? I would say there's a higher probability likelihood of this range resulting in continuation to the upside. So what that means to me is the more tests that we have at the high, the more likely I think that those tests are not likely to offer mean reversion trades. So if we break up towards this high again, even though we have this ranging structure that is forming, it is that short ranging period that is consolidation before expansion again. But again, this tool can be very useful in showing you sort of whether or not we have that overlap, whether or not we're in a more obvious impulsive trending period, or maybe where we're beginning to set up for a range. And as soon as you see that we have this value overlap and we have price that's been confined, and by the time that we're into the third day, by the time that we're into the fourth day, it's becoming very obvious that even if price is making a valiant effort to move outside of it, they were still back within the prior day's values. Okay, so TPO chart is something that we teach on Blockroots, but you guys can find plenty of free information on that. I'm positive of that. Okay, so now let's look at some charts, take some chart requests. All right, where could I find content to learn how to trade futures as a beginner? Well, we teach that on Blockroots, but it depends on, are you talking about perpetual swaps, just futures in general? All right, do you also use this with pivots? So pivot points is in technical pivot points, like the pivot point indicator, or when I say the term pivot point, a lot of the time I'm using that term to talk about weekly structure, daily inflection points, major inflection points within market structure. I just call them pivot points. But there is a technical term called a pivot point. So I just want to distinguish whether or not you're talking about that. All right, so JE, BTC, ETH, and Wi-Fi. I'm glad you said 3 things that I was going to do anyway. But don't anyone take after JE and give me 3 different charts to look at, because otherwise we'll have 150 different charts to look at. Okay, so looking at BTC first, not taking anything for granted. First, look at the higher time frame, the more significant levels within structure that we've passed, where we're sitting right now. Okay, overtaken. Okay, overtaken this monthly swing high. Okay, more recently, this monthly swing high. I don't think that I really need to put too much focus on these right now. All very positive for the higher time frame trend. All that could also be technically support zones on the way down. I say that for higher time frame levels like this, you'll probably get the first test, but remember, it's a monthly close. So anticipating that it's going to be meaningful on a lower time frame level, I think that that's a little bit silly. So we have our monthly levels on the chart right now, weekly levels on the chart as well. So we're just going to shift these. Okay, by weekly closes, let's get rid of that. So weekly close, we'll change that color up. I'm going by weekly closes instead of just weekly highs. If I'm looking, if I'm trying to get a more zoomed in picture or get a more precise picture, I won't just look at the tip of the wick as far as the all-time high or the highest high. I'll consider it, but I think that daily closes are a little bit more important. You get a lot of people that are acting on their higher time frame approaches and systems based on these closes. So there's our more recent daily swing high. Obviously, we've overtaken the previous one going back to 2019. More importantly, this is weekly, excuse me. More importantly, I think, so let's put another weekly level down here. I think that this weekly pivot is important. That is going down to 10,920. So more importantly, I think than that weekly level, what we've done recently is broken, this is something to celebrate, broken the all-time high in the last 2 years. So the last, and this is going back to 2018 pretty much. So we're going back to, is this going all the way back to, it looks like, yeah, highest daily close since 2000 and going back to 2018. So above this level. Now, those levels are useful to know because those are going to be where you're looking for your responses. But, I just put them on the chart. It doesn't mean a whole lot, right? You're wondering, what does that actually mean? The levels are where we're looking for responses, whether it's from buyers or sellers or just looking for a level of interaction around them. So on the way up, we had the close above this daily level last night, but you could see immediately there was no major response after it. Actually, the market started selling off, and that was right around here. So normally what we'll look for after a higher time frame close is some level of responsiveness. If we're going to, if this was majorly bullish and that if that level was going to be if that level, was very significant, we would have seen a significant response. But that level is, again, it's the highest close. It's not a place that, what we've been saying the last 2 weeks is this whole area up here is not a place of really that much significance because there wasn't that much volume transacted up there. So there's not much price memory up here whatsoever. Right now it happens to be that I think what we're seeing is buyers are a little bit more confident that we've made that close, and we are seeing that we're treating this area as support. But this is on its own, it's not enough for me to say, oh, okay, so we're above this this high that we put in the last 2 years. This is a buy right here. I think if anything, your more important levels, if you're looking at higher time frame market structure, I'm going to get rid of that now to not mislead anybody. Your more important levels on the higher time frame, there's not a whole lot, honestly, above us, right? These levels that are above us that I would say are significant are your round numbers. So something like 14K, 14.5, 15, these whole very large round numbers that are lazy numbers, as I say. If I was looking at potentially taking profit, and I didn't have an idea of where there was any kind of major structural resistance ahead of us, I'd probably go by some psychological round, psychological lazy number. I say a psychological number or psychological technical level because just a thing that people immediately decide on is an important number just because it's a big number, right? And you're going to see that a lot of volume is actually transacted at those levels. I'd rather front run them, so I'd rather know that and then front run them. As far as our major levels, though, on the high time frame, this daily level I don't think is that important. I think that they're below us, right? They're at 11.19, going down to 11.6. So this is technically, okay, the next area of support, I'd say that you could come all the way down to it and it wouldn't really be changing much in terms of market structure, is that 11.9 area. Now, in a bullish environment like this, I don't think that there's a high probability that you come all the way down to support. It doesn't mean you can't, but you're more likely to get front ran. So anywhere from, I would say, 12 to 12.2 is an area where if you're not expecting it, just set yourself up for the possibility of that occurring. So between 12.2 and 12,000, I think that there's a good chance that at some point we come and revisit that area. And I'm only saying to prepare yourself because I think people are obviously very bullish at this point, and I don't want anyone to get disappointed if we start retracing. And this can again happen all the way after. You could do something like this, break up to 14, and then come all the way back down there. And again, it would still be respecting higher time frame market structure in a way that would be, I would say, satisfactory. So Bitcoin on the higher time frame, it looks great, right? On the higher time frame, it looks like upward progress. There's really no major levels above us, again, besides those psychological resistances, those whole numbers. We do have the highest high that's at 13,863, but again, the daily close, the highest daily close didn't give us much of a response. I'm not necessarily sure that the market does anything besides become very slippery at this level. So that 13,863 level, what I mean by slippery is I don't think that you're going to get something that does this. All right. I think that if anything, what happens at this level is this is where you get a ridiculous amount of overshoot, and then you get a big pullback. So mind you that it's important that you have some idea of where you want to exit if you're in a trade, though. And that is because at some point, let's say you're buying the breakout here, you can't just hold this thing. There's a high chance, there's a big chance that this thing moves up to, it could move all the way up to 15 and then come all the way back down to 12 too. And it could do that in one candle. We've seen that before. And it kind of takes everyone by surprise. And remember, you always have to just keep in mind how this market moves. As far as ETH, I think ETH looks really good. I rebalanced a lot of my portfolio into ETH that I'd taken some of, it's got something on the screen, taken some of my position off of spot BTC. I got in a little bit of cash, and then I just rebalanced it right away and put it into ETH. I think that ETH is, again, in a great position, but I think ETH is also in a position where it might be worth considering that ETH could come down to 400 and 405 again. It wouldn't change anything. So ETH for me, the most important levels I had were 433. So where did my 433 level go? Okay, that's just the weekly structure up there. So it's, why is it not listed? There we go. Saying why is it not being stuck on that level? So 433, the highest weekly close up here. That is the next level that I have. I don't think that the market is going to... I think that if anything, maybe we come back down and test this 4 level. But I think that ETH is onwards and upwards from here. I think ETH goes to 433 and then probably goes all the way up to... I could see ETH overshooting to 5. This is a really good basing out structure so far. If ETH looked bearish and looked like it was lagging behind BTC, and that was just because it was finding resistance at the underside of this structure for a longer period of time, it's no longer looking like that right now. So 433 is the first area that I would say is first area to maybe manage the position. You could have something like this that ends up coming down here even again. And so one thing that I have to say is I'm in spot. So I am completely prepared for something like this, right? Coming back down even. And it's not going to change my belief on ETH for the next few months. I think that ETH is in a good position to do really well. And I think that this level is pretty key. The fact that we nuked through this level, I think that that is worth. I think that that is worth a lot more than anything else. All right, so Wi-Fi. I am like not sharp this morning, guys. I don't know why. I'm telling you sometimes, and it has to do with I got to bed. I feel like I got to bed at an early hour, but maybe it's just I don't know. I'm wiped. My brain is just. It's really foggy out the last 5 days, and today my brain actually feels really foggy. Okay, so Wi-Fi, same levels for me. I say this is the zone that I'm paying attention to. I would say 16K and above. So more recently, these two pivot points, these stand out, right, at that 15,470 level. But I think that we're above 16, if we're above this previous... little cluster right there, I think that this is probably coming up to at least 20. And again, though, that's a significant level right there. So this daily level right here, this entire low, you have to imagine is going to act as resistance. So if you are taking something from here, just be mindful of that, because this could still continue to put in a longer term base down here, right? It's ran quite a course, and I don't want to call bottom on this one without a lot of evidence yet. Without a lot of evidence, period. Okay, so Link. Link, still confident in my spot. Like I said, I was stopped out of a swing position that I was a little upset about being stopped out over here because it was a matter of a wick that stopped me out, but I would have been stopped out either way there. Link is, I mentioned this yesterday in one of the Blockroots streams. Link is up there with ETH, I think, and BTC, and being sort of the one point of the triangle in crypto now. I think that Link has really established itself in the market as a mature asset to have an investment in. It is very strong. I don't think that it's a, quote unquote shitcoin. As far as Link goes, this daily cluster level is my next area, so that 1281 area. But I think that in this kind of environment with, say ETH is persisting upward and Bitcoin is continuing upward, I think that this midpoint right here becomes an area where you're more so going to be managing the trade rather than thinking that this is a good area for me to, take profit. For example, I was in a swing position from back here that I was stopped out of. I never even bothered re-entering in it. Just started trading ETH and BTC on futures. But I wasn't going to, in these conditions, okay, say we're in this position right now and I'm still in my trade and this is my first target, I would probably consider adding around here, looking for a weak response to add around here versus pulling the trade off. I think that this level is kind of insignificant and the next level is 15. Now you have to imagine there's a lot of tailwinds right now with Bitcoin, from Bitcoin and from ETH. So if they're continuing to move up, I think that this is just an insignificant level, and Link probably does away with it. So even though it is marked off as a daily level for me, and it's the high of this cluster, I think that there's a lower probability of it acting as a really strong resistance. And this kind of gets to the joke of, in a bull market, buying resistance. In a bull market, buying resistance is sometimes not maybe the worst idea. Or if anything, your odds improve in a bull market of buying resistance. The odds improve that it'll occur favorably, right? So Link looks good, I think. And I think that as long as Link maintains the top side of this structure, so even if it comes back down to 10.9, I think that it's completely fine. We've seen Link in the past have some of these bottoming out structures that have looked almost identical to this one. And this might be sort of more like this right now, but this was dead space, so it covered that quickly. Whereas there is structure above us, so there's a little bit of equivocation, I think. But I think that this ultimately comes up to this 15 level again, and then further up from there. So, all right. Okay, what are we looking at? Curve, CRV. I feel like I need a nap, guys. Maybe it's just because my niece just drains my energy and she comes over early and it's like noise in the morning, and curve looks terrible, man. This looks horrible. I wouldn't touch this with a 10-foot pole. So there's no weekly structure to even go off of with this to say like that's a weekly pivot that's worth paying attention to. This is just I mean, the daily levels, if you went off daily levels versus BTC, because you would want to see that this is at least showing strength against BTC first. That's your most recent. That is a slight semblance to a daily low right there, because we had some relief. And what that would mean is if this was a significant low, then I would maybe play something like that, a under over on top of that at 465. But I can't look at the curve right now, man. It doesn't even look. It doesn't look like it's alive. Yeah. Yeah. I think BCH is irrelevant at this point. Yeah, JE. I sometimes I feel like I wake up with a ton of energy. I have a cup of coffee and it's great. And then this morning, like, this coffee is just not doing anything to me. And you know how sometimes you just wake up. I described this in a I described this in Karusha's podcast. Sometimes you just don't have the words. Like right now in this live stream, I actually feel like it's requiring effort for me to think of the things that I'm talking about. So, yeah. But I also ate actually no, it wasn't that. I had a pretty big breakfast, and that requires some I know that requires some energy to digest, so but it's really borrowing from the rest of me right now. Dot. So Dot, I've been talking about Dot for the last few weeks, as I think that it's showing relative strength to BTC and compared to the rest of the market. I think that Dot is beginning to, Dot compared to other alts, Dot had these violent sell-offs initially, but now each sell-off has subsequently becoming smaller and smaller. Dot against BTC, it has some work to do, same as ETH, but they began the turn from the 21st. Looking okay. I would obviously be more confident if Dot started retaking previous structure, so previous lows, maybe signify a short-term trend change. Dot versus USD, though, I think some of these charts are really important to also look obviously against BTC, but this is so new. The performance by ETH and Link against BTC since the whole DeFi bubble kind of popped, it's beginning newly to shift again. It's beginning to shift more recently again. Everything was getting clobbered, right? This USDT chart, though, or Dot against the dollar, it doesn't matter if it's Tether or the dollar, it's starting to look good, right? So for me, Dot is at 450 level, and I wanted to get in. I wanted to say, I'm gonna be a little bit more confident about this earlier, maybe just above this high. But as you can see, we're still kind of contending with that point right there, which is like 449, 450. And it's obvious though, right? If I was just going to try to draw this with this simple outline. Okay. And now we're above a more recent high. But I would rather see something like that. Right? A successful retest of the top side of that structure. So 450 for me is the level, and say that might mean that we pop all the way up to 490, and then I'm thinking I might not get that perfect retest, but at least I'll have the confidence at that point that we've nuked through the level, and we have a good amount of volume behind it too. Yeah, theanine's good. So theanine reduces the jitters from the coffee. I used to take theanine. LTC, I don't know. I'm not really feeling LTC lately. I'm not really feeling a lot of the older, more popular pairs. They, LTC's chart looks good. The log chart looks good. It looks like this is a, huge macro generational flag, right? But I don't think, I think LTC, again, I think, so whenever I got into crypto, I used Litecoin to get from one exchange to the next. Just find a BTC pair. I use Litecoin to get from one exchange to the next. Where is the BTC pair? Am I missing something? We'll go to XBT. Oh no, there we go. Okay. This is BitBay. Whatever, it works. I don't want to use that actually. I want to use something. Come on. There we go. Whenever I first came to crypto, the only reason I used LTC first and foremost was because it was fast, so I could use it to send between exchanges quickly. I think that it's not. I don't think that it's anything anymore. Honestly, I don't think that LTC is the silver anymore to Bitcoin being the gold. I think it's completely, unless they partner up with some major payment provider, it's irrelevant at this point. I think that sometimes now you just have to be brutally honest, and I don't think LTC is gonna change the world at all. So in terms of more recent structure, though, important levels. Now we've already surpassed the 2017 lows, 2018 low. It's just downward, further and further downward. So for me, I mean, you might be able to say that this weekly pivot, that if we reclaim that you come up back to 55.78, but in terms of a higher time frame turn, you need to be at least back above this 55.78 level. Okay, so something like that. And then at that point, you're just targeting this previous structural level. that sticky area right up top that occurs right between all these points. It's just not looking good. So sometimes I want to give you a more confident, better answer, but sometimes I also just see the chart and I think I'm just going to chart this, but it looks like shit. Okay. Yeah, well, it could be. I'm just trying to think. Like, yesterday, I didn't have the best meals yesterday, put it that way. So last night, my wife and I we went grocery shopping. We love to play this game when we go grocery shopping where one of us scans. So at the grocery store, we take the scanner and you don't have to go through the checkout anymore. We scan and then they'll randomly check your bag. They'll check 5 items at the end to make sure you're not stealing. It's basically just walking out with everything on your own. It's awesome. So one of us will scan, the other person will guess. All right. So, guess the price. If you're close, you don't win anything. The person's got to cook dinner if they're whoever's closest, right? So we went grocery shopping, got home late. Didn't wanted to watch a debate, turned it off halfway through. I'm like, why we watch this debate? Sucks. That all they say are things that are just to appease the stupidest possible person. I hate to say that, but you know how the debates work. They don't even tell you their plans, either side. They don't tell you we want to improve healthcare for everybody. They don't tell you anything. It's the same stuff for every president. But either way, we came home late, and you want to know what I had for dinner? Because my wife was like, you know what I haven't had in a really long time? Pierogies. I haven't had pierogi in a really long time either, so it sounded delicious. So my wife sauteed up some onions, had a little mustard on the side, made some asparagus, but then threw a bunch of mozzarella cheese on. Like, it was not a healthy meal. And I think that I have sludge going through me right now. Then I got a decent night's sleep. I went to bed at like 12:30, so it's actually not that good. So I didn't have a good night's sleep. So, but I'm drinking just to get into full details. I'm drinking older coffee, which might not be a good thing to do because it's not old, but I took the coffee the coffee was put into a carafe into the refrigerator from 2 days ago, so I could have cold coffee. Right? Sounds good. Now the problem with coffee though, and I don't know if this applies when it's refrigerated, is that coffee, there are these things called mycotoxins, and I'm pretty sure that those toxins that form, they're sort of like the antithesis to coffee when it's fresh. When coffee is fresh, you get that caffeine in you, and it perks you up. And then I think that when coffee is slightly older, there's an adverse effect to it. That might be, that study might be disproven already. Yeah. So I'm not on it right now, guys. I'm sorry. This is called, crypto and coffee, and it's like crypto and sleepy. You are my captain. Okay. All right. So CVD, we'll explain that real quick. Let me look at Jimmy Trendrix's algo because I love his name so much. I can't miss I cannot look at what he wants me to look at. So algo, looks like kind of, a lot of these pairs, guys, are going to, just to be honest, a lot of these pairs are suffering. Please call this number to donate to these pairs. You want to put like a Sally Struthers commercial for this, sort of like that animal commercial they used to play in the 90s and early 2000s, Save the Animals. Whatever, I forgot what charity it was. But a lot of these pairs are suffering because DeFi took away all the attention. So if we look at algos versus BCC, algo versus BTC, algo versus USD, you could say that we're back at an area that should act as support, but we're retesting this thing many times. So why was this a good buy back here? All right, so if we go all the way back to, so for me, for alts, we'll just clean this up. My approach with alts, make this very simple. I don't really like them too much. I don't waste my time on things that I can't put a lot of money behind. I have gotten more involved recently. It's been fun, but I don't get in alts in the lower time frames. It just doesn't make sense to me. I could trade Bitcoin or something that's more liquid. When it comes to alts, though, I look at higher time frame structure. So first things first, this was the higher time frame weekly low that we had for a really long time, right? Now, what I do is I'm looking at that now as an area to reclaim, and that is it, all right? When we're down there, I'm not looking for longs. If we have the last weekly structure and it's above us and we've just lost it, I'm not looking for longs until we're showing a sign that we've reclaimed it. So for me, alts are just a matter of this, right? So we have a chart. Let's say it's just been in a perpetual downtrend. This is a weekly chart. And now we have an area where we're establishing a weekly range. A lot of the alts, what do you see happens? You see that they lose the weekly range, and it looks like it's just downward on from there, right? And that's a point where I think people short and they get trapped, because this is just consolidated after putting in a really long low. You get normally one of these moves that occurs lower, and then we've reclaimed the area, and now it's a long. So that is like a very basic approach, my very basic approach to alts. Higher time frame, weekly structure, reclaim previous levels that were significant, and take the short opportunities to the next sticky point after that. On this chart, the major weekly levels clearly are down here now. So we have this weekly level still. This, you could say, this whole area right here should act as support, right? Because on the way up, there's resistance right there in that general area. I don't want to get confident on that. This is an alt that has, again, just put in a tremendous move to the upside and has retraced the entire move, right? So 300%, 200 and something percent. It doesn't really look good from where I'm sitting. So I understand that when people ask about specific alts, probably because they have positions in them, and I feel for you. Okay. Yes, caffeine. Yes, caffeine. So caffeine works because it looks a lot like an adenosine molecule, I believe. So adenosine, adenosine triphosphate, ATP. So adenosine, when it binds to the cells, it kind of says, go to sleep, guys. And the caffeine molecule looks a lot like adenosine. So it binds to the cell and it says, wake up. All right. So for whatever reason, I feel like my caffeine is not connecting. All right. So Neo, please. All right, Neo. Another one that I think is probably dead. Yeah. Not looking good for Neo. There's not... I mean, the most opportunity is already behind us now. If you're looking at Neo on the high time frame, this is, you could get a bounce in this area because we're back down in this sort of general area that has acted as support and as resistance moving forward. But there's nothing, guys, whenever I go through it quickly like this, it's because there's nothing attractive about these charts. I feel free if you have a position, but it looks like Neo, if you ask me where is Neo going to be in a few months from now, I'd probably say back down here at some point. It'll revisit back down there. Offer a better opportunity to long back down there. So if you're, we're going back over what I just went over, which is when I would get into alt position. If Neo did something like this, so broke below this low, why'd I do both? And then did this, then we're in business. Okay, that's how it works. Then we're in business. That's how I'm in business. You too, Kilgore. Oh, Kilgore, don't leave yet, man. So I was looking at, so Kilgore's a buddy of mine. And we've never met like many of my buddies on CT. But I was looking at the, what is it, the rat? I'm a knife guy and I like guns too. But the rat, you sent me the picture of the rat a while back. Who was it? It was a Xayak or Kryak. But send me some more that are similar to that one because I like that. But I don't need the whole practice one. But I do like that build. Kilgore knows what I'm talking about. That's why I was up late last night, man. How pathetic is that? That was the last thing I was doing, actually. I was like, okay, I'm not going to get into it. But, okay. Exiting position while still break even. Wi-Fi. Went over Wi-Fi already earlier. Yeah, so the only thing that I think is relevant are those right now. We've come off of a period of ridiculous movements with DeFi and a lot of alts benefited as well. And now it's time, I think, it's sort of the cycle back to the main pairs. So I don't think the opportunity is in alts right now. Yeah. So you'll know because, if alts start outperforming and Bitcoin dominance starts going down again, it might be a sign, right? ETH also, let's say ETH is going on a tear and alt are starting to outperform. It's a few things to pay attention to, but I don't think that I think that Q4, aside from some things that are chosen by the market, you might see this in Wi-Fi. I think that Q4 is for Bitcoin and ETH and Link and DOT and potentially Wi-Fi, and it's more of a picker's market. A lot of those old pairs, guys, a lot of the stuff there's like 5,000 cryptocurrencies, guys. A lot of that stuff is done. A lot of it's done. So, all right, guys, we're like an hour into this. I'm going to probably wrap it up. As far as looking at BTC right now, let's just go over it one more time. Your major levels for me that I'm paying attention to if we have a dip are 12.2, 1200. The first area I would look to, honestly, before that is this 12.6 level, just because that's where we have a single print little gap right here. So I could see us doing something like this. So I'll look for that opportunity. If we dip down below this low, I'll look for a long from there. But on the higher time frame, can we pull back down to this 12.2, 12,000 level? I think absolutely. In terms of the short term, though, I don't think that there's any real reason to be bearish on this yet. We're not in a position where we have ridiculously positive funding. We're not in a position of incredible euphoria yet. This looks like the consolidation, honestly, that occurs before another break upward. So I think that we're going to break upward again. But that's that, guys. I'm going to make sure that on Monday, this morning on Monday, coffee and crypto, that I am lit up. So everyone have a fantastic evening. I'll see you Monday morning. I'll have plenty of coffee. And that's that. Everyone have a great evening. Have a great weekend. And I'll talk to you guys soon.